the Bank of Canada's September interest rate cut may have had a positive impact on the housing market in the GTA. Buyers appeared more than ready to take advantage of the cut, and they're also anticipating more. Now, while the average selling prices did trend down over September of last year, sales shot up 8.5% compared to the previous September of 2024. Let's talk more about the numbers. Toronto Regional Real Estate Board's Chief Information Officer, market analyst Jason Mercer is here. Jason, really interesting snapshot of what's been going on here. Supply seems to be such the issue. More houses getting on the market, giving buyers more of a chance to sort of bid down, it seems.
Yeah, I mean, we've seen an improvement in affordability really over the last year, and certainly on the supply side of things, giving buyers more negotiating power, really in all segments, whether you're talking about, ground-oriented homes like detached and semis, and certainly condominium apartments. We've seen prices trending lower, and then on top of that, we've seen lower borrowing costs in comparison to last year, including the cut that we saw in September. So it's certainly helped out some households.
And I find that fact interesting in particular because, we speak to a lot of sort of mortgage brokers on the program as well who say, you know what, if you wait till the borrowing costs come down, the price of the house may go up. But right now, there seems to be kind of this sweet spot area where prices are coming down because there's a little more supply and the borrowing rates are coming down. This seems like an opportune moment for a lot of people.
Yeah, it's an interesting period of time. And even, if we see one or two more cuts on the part of the Bank of Canada, which would really put households earning the average income in a good spot to move back into the marketplace, we will have this period of time where there's still be substantial inventory that we need to unwind. And so there will be that negotiating power in the months ahead as well.
Is there any concern here of, that the bottom could fall out? Or is it just the fact that as much as supply is decent right now, we still don't really have the supply to actually keep up with our real market demands?
Yeah, I mean, it's interesting. On the one side of the equation, we've seen an improvement in affordability. But on the other hand, we have some households that are a little bit hesitant to take that plunge, either, move out of their existing home into something new or buy their first home because, there's concerns about the economy. And one important thing to remember is, if you think about past economic cycles, the housing market has actually led recovery because there's such a strong connection to other industries locally that, every purchase of a home, actually leads to, $70,000 or so of additional expenditure in the economy. So billions of dollars of economic impact. And so it's sort of a virtuous circle. Number one, people can get into households or houses more affordably. And number two, it helps the economy when we're experiencing issues, with trade, et cetera.
Jason, I feel a little ignorant after all these conversations, not knowing the answer to this question, but do your numbers compile new builds as well as resale, or are you strictly on the resale side here?
Generally speaking, we're talking about, resale homes, but insofar as some of our members are also working with people that may have purchased a pre-construction home off of plans, and now it's come to completion. Some of those investors may be looking to sell as well.
Because the reason I asked that question is we've had, we had Build on here recently. We had another building group on here talking about how, we're lagging so significantly in getting that new home supply to market and even sales of new homes here. That ultimately becomes the pool that you'll be looking at here. So that could shift the numbers as well, couldn't it?
Yeah, it's a really important point because if you think about where we are right now, there's a lot of inventory in the marketplace. So we've been saying to policymakers, don't take your foot off the gas in terms of supply because look where we are right now. We're seeing, almost record lows in terms of pre-construction sales. So at some point down the road, that's going to mean we're not seeing as many starts, we're not seeing as many completions, and we don't want to get back into this vicious circle where the market tightens up again and you're seeing unsustainable price growth.
Yeah, it's fascinating to watch. We always appreciate these monthly breakdowns. Jason Mercer, have a great weekend.
Appreciate it. You too.
Jays, go.
Jays.
Yeah, absolutely. We'll talk to you soon.